Hey, everybody. Good afternoon. Doc Severson and Dave Lukas here from 12 Minute Trading. Today is Monday, the 17th of July. Markets continue to rock and roll as we get into the heart of the earnings season. So we've gotten past all of these, CPI and PPI and everything like that. And we're in a Fed quiet period right now, at least for this week, until next Wednesday, where the FOMC policy announcement comes out. So that'll be interesting. But next week will be peak earnings for the quarter. So we're looking at second quarter earnings for 2023. Dave, what you got in the market? What are you seeing out there these days?
We keep seeing it's been interesting. The last two Fridays, we've had these kind of doji days where we've, ran up for the day and then the final hour or so sold off. And usually that's a sign that you've got a shorter term reversal in the market. But then we come in Monday and we just skyrocket higher. So this trend is pretty relentless. We keep seeing the energy kind of stay into exhaustion on these time frames, like the weekly chart and the daily chart. And we were talking about this earlier. There was a lot of short activity going into this. A lot of hedge funds were short, but most of those have unwound their short positions now and stuff. So we're kind of getting to the end of where everybody was a bear, right? And so a lot of times, once that happens, then the people shift to the other side is when you get maybe your move. Typically, and you can go back, you can backtest this, you can go look at it, but typically in like what we call quiet and trending markets, uptrending markets like this, you're going to go and you're going to run, and then you're going to have like a 3 to 5% pullback. A lot of times like the moving average, like on a daily chart or the weekly chart even. In fact, if you go back to 2021, when we had that really similar type of trend that we're in now, this one actually is a little bit more relentless higher, but 2021 was a grinding higher upward trend. And the thing that we would see is we would pull back to the simple moving average. And then that would be the spot where we would bounce from. This thing has not touched the moving average in almost 4 months. So at some point we're going to see, that reverse, that at least that correction, right? And I think it's going to come as we probably get into the early fall here. Typically, the back half of July and August gets a little bit more volatile, and then September a lot of times is very volatile. So we may actually go sideways for a little bit, and then have that type of correction. That's and it's going to come from some catalyst is just not priced in. Nobody's thinking about, it's kind of, and it probably is benign a lot of times, right? It's not something that like you would think is a big deal and then it becomes a big deal. So that's probably what we're looking at. So, but for now, it just seems like we're pretty relentless higher.
It's funny because if you go back and listen to what we did in the first 6 months of this year, obviously the first 3 months of the year, we're trying to figure out like, hey, we just hit a new higher high. Is this going to live, or are we going to retest the lows of the bear market again? So there was 3 months where everybody was convinced that we were in this is just another bear market rally. And, it's only a matter of time before the next recession kicks in and we're going to be retesting the lows. So I think that was the conventional wisdom back then at the time. And if you go back and listen to what we were talking about at that time, we were not necessarily convinced because we had just made a new higher high. And then as the price continued to consolidate, as we get into like the April, May timeframe, we were consolidating under 4,200. Both, we just kept coming here every week going, boy, we're going to get a hell of a move one of these days. And it's not going to stop. And it's just going to keep on going. And now we're right in the middle of that. And it's like, sometimes you wish you could listen to yourself and do what you tell yourself to do. But we thought there would be a good move.
I think we called that well. The one thing that I'm still surprised at is that we haven't gotten any little bit of a pullback. Like even 3 months in at this point, even a little 3 to 5% true drawdown, right? Just really we haven't got. And like I said, if you pull up like and I could do it on my side, but if you pull up like a weekly chart on the S&P or the NASDAQ, and you just look at it's just running along the upper Bollinger Band where it usually would pull back to that moving average, and that would be support, and then we go again, and so on. So we've had some little ones, very little, 1 to 2%, but not that 5%er that you're typically going to see every 6 to 8 weeks in something like this. So,
we've had these moves before. Like if you look at if you look at 2016 and 2017, we went through exactly the same thing where it just was persistent and the bears were screaming. And, obviously, if you look at 2021, we had the same kind of thing. So we will get these, especially off of the bottom, like that second half of 2020 where we came screaming off the bottom of, the March, or I guess talking about like April, May, June, July. And I think we had like September and October were kind of choppy. But yeah, those were relentless because everybody had just figured out how to be a bear, and then they get destroyed. They get plowed over by the freight train. So I think we're in the same kind of condition right now where it's like people are saying, oh man, this will, what's it going to take for this to stop? And when the last person finally gives up, this is where we'll see. This is where we're going to see your 5 to 7% correction. So that will kick in at some point.
As soon as all the people that were bears before become bulls, that's when you're going to see it. It could be worse than 5% at that point. It could maybe be an 8 to 10%, which after moves like we've seen is, would actually be not a big deal. It'd be pretty healthy. It would feel horrible when it did, but that would actually be really healthy to keep this bull going.
That's actually true. We had a 10% correction in the fall of 2020 after that strong move off the bottom. We had, and it took 2 months to work itself out. So there was a lot of, FUD going on back then because people thought, oh, it's going to turn over again. And it didn't. So, but I'm, I am still convinced that we have seen the lows of the year, definitely. And I think it's just a matter of this thing needs to transition. It needs to set up. The next monthly high or low, I think, would be really, really good. Otherwise, we still have the possibility of this thing putting in a monthly lower high and rolling over on some kind of exogenous event, so who knows? But, we just sort of look at the market from a couple of months in a row. We're not sitting here trying to, where is this going to finish at the end of the year? We let all the pundits go figure that out. By the way, if there's quite a few of you online right now listening to us live, which is great. So if you have any questions, if there's anything that you'd like me or David to address, please let us know. Just chat into the box. And for those of you that are watching this later on a replay, thank you very much for doing that. And you can always email us if you want to have us address something in one of these sessions. So we do these on Monday typically, as long as we're not traveling. And I think we're going to be travel clear for a little while here until we get into the fall. So
if there are any questions, drop them in. I think, one of the things that this move has made me do, and I've had to, be careful about it, is I had a lot of winning trades through the first half of the year. And then as this transitioned into really this relentless, I got longer term trades that I do. And some of those longer term trades, this thing's running up to within some thresholds on those things. Amazingly, I set those trades, 20, 30% out of the money. And so I'm having to adjust those up like in their cycles. But what I'm really careful about is like, if I adjust the top side up, and it costs me a little money to do that, right? I'll bring the bottom side up to help pay for that. Cause it's like an iron condor that I'm doing typically 4 to 6 months out. And the thing that I'm doing on the bottom side is I'm going with a smaller spread. So let's say I do a 10 wide on the top side, and that's what I roll, up to, and get myself, maybe another 5-10% out of the, away from where the price is. When I bring that bottom side up, I'm only going like a 5 wide or maybe even like a, 7 wide, just to give myself that room, in case we really get that nasty pullback, because then I can then widen that to the size of the other condor and roll that down. So for those of you managing trades out there, just a little insight for you on how to kind of think about this as you do it. It's something that you just got to be leery of, because what happens is a lot of times this happens, there's expected move in the markets, right? And we've been blowing through expected moves pretty handily as of late, but usually things revert to the mean. So, if in my case, if I have an expected move on the S&P 500 and on the SPY of, let's say 45 points in 6 months, and that thing goes up 60 points or so, well, a lot of times what's going to happen is you're going to revert to the mean at some point during that time frame. And it's usually right after you can't take it anymore, right after that you're getting heat and you're getting attacked, and you just like, all right, I got to do something about this, and I move it, right? Or you move it, and then you bring the other side up to pay for it, and you go the same width, and then all of a sudden it comes and gets you the other side. I call that playing ping pong. So you just have to be careful when you're adjusting things for that. A lot of people will just leave them on and play the risk and play the numbers game. And believe it or not, if you set up a trade that has a 95, 96% chance of winning profile, you're probably going to win it if you have the stomach just to stay in that, and maybe even let it go in the money a little bit on one side. It'll probably come out the other way. So that's just from a personal thing that you may want to think about as you manage trades, because it's a thing you have to deal with, especially in this trend right now.
Yeah. One of the things that we've had to do in the daily target 100 is to go with more aggressive stops. So for those that are still using the high probability trades, where we're looking to sell maybe 5 delta, 4 delta, something like that, we've had to go to, or those that are still practicing that are going to like a delta of 30 to signal the stop, which has actually worked out okay for them, apparently. To do something like that, it does take a little bit more capital to hang in there. It does take a little bit more courage to hang in there, but that is working out for them. I'm still staying right now with the compressed volatility. I'm still playing much closer to the money to get in larger credits, but I also at that point have the real risk of getting run over, which is okay. I don't mind being run over if I'm collecting, a big fat credit on the trade.
Right.
And just looking for some kind of mean reversion to close the trade out.
Yeah, because you're taking a percentage of that credit. You're not staying in for the full thing, and that's kind of the idea. Is you're risking a lot less. You're making a lot more up front, but your chances of losing the trade are a lot higher. And you're just looking to collect a percentage of that credit and then get out of it. So that's a pretty it's actually a pretty good strategy for this market. Even coming into this week, it seems like the volatility is even lower, and I have to think that we're going to get something maybe with earnings this week into next. Because we have the Fed announcement next week, it'll start to spike up a little bit. But I'm pretty amazed at the volatility compression. The options chains, just even from a month ago, where you can sell positions at versus even a month ago are drastically different. Even in that amount of time. So something will come along, change that catalyst to change that a little bit. I don't know what it'll be, but what I think again, things revert to the mean.
I think one of the big changes, if you look at this versus previous years, has been through the zero DTE. Things happen so much faster now. So I think that was an almost record collapse of implied volatility that we saw since the beginning of this year. Or even going back to December, volatility has just dropped to nothing right now. And so as a result of that, what you're getting...
Do you think it'll ever come back, or do you think it'll ever come back to like normal levels, or do you think that just zero DTEs torpedoed it, so that's just the way it is now?
No, what I think is that we will get spikes in the future. That will happen, but they will come faster and they will go away faster. So everything will transition much faster. So what we're used to is, if you think back to the days of the great financial crisis back in like 08, 09, we had years of inflated volatility for a long time before it sort of came down eventually. It was years of that. And even in 2020, we had... all the way through 21, we had a lot of volatility inflation through that move because everybody kept looking over their shoulder like, oh, when's the next pandemic? When is this going to come along? Right. And so, we lived in fear, or I should say the market lived in fear throughout that rally. So it climbed the wall of worry because everybody was convinced that, something was going to happen. And so we dealt with that but this is the quickest collapse in volatility that I think we've ever had to deal with. And so kind of makes you want to be a buyer to some degree. And then the very second that you convert over to be a buyer, that's when you'll get, we all know that.
Well, I found some good. I found, that on some trades that, before risk events and things like that, like adding some long deltas, even for, I wouldn't call long, but just adding some deltas. If I've sold, just buying some cheap puts or calls in front of my positions, for like 10 cents, 20 cents type stuff. And letting if the move comes, just using that, to make and help manage trades has been working really, really nicely, and so that's kind of, you have to be a little more active, right? Than you used to. You have to play with a little bit more defense. We're really used, and in some ways with what I do, really used to setting it and forgetting it and not really having to do much with it, and so now we're having to pay more attention to some of these risk events and pay attention to, these kind of intraday moves that we're getting, to utilize those in our favor, right? So that's the other side of things. I think employing that's helped out a lot, but it really is. It's interesting to me. It's a game of musical chairs. This thing will go on. It seems like forever. It'll always go on longer, right? These moves always go on longer than anybody think they should be. And I'll be honest, back in, mid-June, I was saying, hey, we should be getting a pullback, and we haven't seen it yet. And here we're in mid-July, right? So these things always go on longer than people think they should. And then they change when people least expect it. That's how markets go. And so, I think we probably still have a little more ways to go yet, right? There isn't anything that I see, and you tell me what your thoughts are. Right now, it's kind of like a malaise. We're going to get some earnings this week. We get to hear from Netflix and Tesla. I think, I don't see any reason those guys are going to have really bad earnings. Tesla's deliveries have been good. Netflix went to, ad supported, so their revenue should be up from that. So, I don't know if there's going to be anything major that comes out of there from tech. Banks, maybe. Bank of America's tomorrow, right? And they're the ones that have probably the biggest risk when it comes to bonds, kind of like the SBF risk, right? The mark-to-market bonds. I think they're sitting $100 billion worth of losses, but Bank of America is a company that can sit on those, right? They don't really have the liquidity issues or things like that, and so I don't know if that's going to make a big difference either. So it's kind of like just like where's the trigger, right, to really have a decent pullback. We've got some massive gaps even from last week on the daily charts that normally would get filled pretty easily, but I don't know. I'll just have to see. There's got to be, there just has to be something that comes out of left field to change it. So,
yeah, we got a question coming in on some trades on the NDX here that people have been dealing with some pain here, and it's Dave, you've been following the NDX for quite some time now, and the one thing,
I continue to play it.
The one thing that I will say is that when we get into an exhaustion, especially a 25 exhaustion, what we typically will see is a sideways coil, a sideways volatility coil. That's the most common that we see. The second most common would be a back from whence it came, which is actually a very fast way to recharge the energy. And the third and least, or I guess the most rare version that I see is the price will just keep on going. Will just keep on going, but it will do so in a very slow manner, more based on the smaller time frames like this. And that's what we're seeing right now. We're seeing version number 3, a consolidation, where it's just an upside grind. And that's why we have these. Last
week was particularly interesting though, because like if you follow the NDX went up over 500 points in 3 days. That's still a really big move for the NDX. That's not grinding. That's an explosion. Right. We had a fully charged daily chart, which now is exhausted again. So it's, but to see that continue after the moves that we had in that chart, it's really that's pretty impressive. The thing that I'm interested to see how it affects things is on Friday, the NASDAQ announced a rebalance in the NASDAQ 100, taking those top Magnificent Seven, as they're called, from I think they were like 50% of the gains of the index, or what's driving the gains in the index, down below 40, but it doesn't go into effect till next Monday. So, you can have a lot of people driving some things up this week. so they can take profits on it when that happens. But what we may see from here on out is not that the NDX won't continue going up. It just may not go up at the clip that we've seen it going up. It may be a little bit more muted. But and that would actually be really good, right? That would be good for the index. But the time will tell on that, right? These rebalances usually don't even notice them. It happens all the time. This was special. It was called special rebalance. So we'll see.
Right. Now, I've got the NDX option chain up here because I got a member calling in with a question in our chat room and talking about, here's today's options. And they're saying, hey, what's the odds of having a 15,700 strike expire out of the money? And my mention was 65%, which we can take probability out of the money, or the inverse of delta. Now, let me see if I can find this. There's another one, which is the probability of touching, which is basically, if we look at this, the 1700 probability of touching is, where are you there? 68%. So it's almost the inverse of delta on this one. So there's a 68% chance that the price is going to come up and touch that today. And you're still got a 65% probability. Now, what you have is that the longer those options live, so if I were to do this on something like a 30-day option, that would be a much, much higher version of probability of touching versus the probability out of the money. Those will eventually be the same thing by the end of today. And so that was that answer that I put into the chat room.
Well, the expected move still today is 31 points. So you have to look at it like, okay, if we're going to tag the expected move, I mean, this thing had a nice little explosion in the last 40 minutes or so. It was hugging 1650s pretty much for the whole day, and all of a sudden it shot up to almost just right at 15,700. So the thing that is I'm kind of watching right now is the 1 minute chart, the 1 day 1 minute chart, going into the end of the day on that, because that's going to show me kind of how things are going to break. The 5 minute chart may help too, but the 1 day 1 minute is going to kind of show you how things will break. If you have the ability to roll it up 20 points to like the 1720 range or so, that's probably going to give you a little better. It's going to cost some money to do that, but again, is it about making money at this point or just exiting for minimal loss? So that's something to look at on that.
So the upper end of today's expected move, which is a 1 standard deviation move, would be at this time, as we're looking at this with a little over an hour to go, would be 15,716, which is just outside of your 710. And then there was a question about tomorrow, and the what strike was that? 15,820. So if we go all the way up here to 15,820, that is looking like
it's close, because I think the expected move is 116 as of right now.
Yeah,
through tomorrow.
Right. So it's 116.5. So you can do the math. You can add whatever the price is right now, 15,690 plus 116, and that is so typically a 1 standard deviation is going to be around the 15 or 16 delta, and so that's within the span of probability of touching is 36% on that thing. So there's different ways that you can look at math with these things, and
what you want to watch for on that trade, and even the one you have now, because this thing's moving higher again, I got it up, is in the next hour, we're getting about 3:00, you're going to probably see a dip down in the NDX. A lot of times you'll see, maybe even the first half hour even, you'll see the thing pull back 20 points maybe from here, maybe back into the 15,670s or so. And then it'll run higher into the end of the day. The final 10 minutes will be crazy because of 0 DTE. You'll have massive, crazy movement. If you're trying to manage or move a trade in the final 10 minutes, it's almost impossible. You may not even be able to do anything on it. So you've got to make your move really probably by 3:30 Eastern if you want to be safe. And so what you want to look for is that dip down, and then that's your chance to roll up in the cycle or roll in the next day higher up. And then same with your trade for tomorrow. The other thing you might want to do is just buy like a 5-way call spread in front of these things. So you can go out and there's like this the five wides. You can get those only on the quarters. So the MDX will have like 25 and 75, right? And so you can do like a 25 by 30 or a 75 by 80 or a 70 by 75 in front of it. So, if you've got an 820 for tomorrow, you may look at like this 1775 by 1780, buying that. It'll cost a little bit, but it may be cheaper than rolling, and you put that in front of it. And then what'll happen is if that thing runs tomorrow, that'll go up in value, and then you can sell out of it and use that to roll your trade out a little bit further and pay for it. So
Okay, Lawrence has got a question about joining on. He must have signed up for your service, Dave, with the 14-day trial.
mm-hmm.
Did you
Nice.
give
Hi,
trades
Lawrence.
for this
So
week?
you should in the portal you'll see the newsletter for the week. I've been doing trades later in the week because of these risk events and stuff. So I haven't put on any new trades for this week yet. I'll probably do them after Wednesday, Thursday into Friday. That's what's kind of been my pattern as of late, just because we've had a lot of different things. I want to wait till Tesla and Netflix earnings go through. I may make some adjustments. I'll send alerts for that. You should be on the email list for that. But if you go into the portal and you go to the weekly newsletter and video, you can read the newsletter as well as watch the video for the week where I cover things. There's a little oil play I'm looking to get in on BRY. I'm waiting for it to drop below $7 to go in and sell on that. So that's another one I'm looking at. So, yep.
Okay, cool. I think we are good. So I think we've answered all the questions that are out there. Again, I want to thank you guys for joining us. Make sure if you're not already subscribed to the YouTube channel, please do so. It doesn't cost anything to subscribe to the YouTube channel. We're not going to spam you or anything like that. You'll just be notified anytime that we do a broadcast like this, or if we post a video, which we normally do a couple of times a week. So make sure you subscribe. Doesn't cost anything, and it certainly helps out the channel. Allows everybody to know that we're doing something. So thank you very much for joining us here today on a Monday on the 17th as we watch the market grind higher, and we will do so again probably next Monday. So we'll probably see you next Monday. So from Dave and myself, thanks everybody, and have a great Monday.
Bye, everybody.
All right, take care.
Take care.